This is Robert Garcia, your host again with the Eric Stewart Group of Long and Foster. And today we're bringing again one of my favorite guys in the lending industry, Edwin Gray, a good friend of mine, a good professional loan officer that I know for many years. Actually, I had in one of my previous videos, we were talking about different things and we're concentrating with a lot of the first-time home buyers. This time, we're going to do a little bit different, and we're going to talk more about what it is available to all of the updates that have to do with the industry. So we're going to talk more about that. So Edwin, microphones are all yours. Please give us that wisdom that we're looking for.
Hey, Robert, how you doing, man? It's great talking to you as always.
Thank you, thank you.
So yeah, we've had some, our business is always so very crazy and interesting. But we love what we do, and we just love serving the community, of course, as you do as a realtor. And one of the things that's really, really important for us to address today is the fact that the market has been changing dramatically the most recent 8 weeks. And what I'm referring to, Robert, is interest rates, which is obviously a huge component of what we do on a daily basis. Would you agree?
I will agree 100% with you. I think there is a nice way to sense the consumer's temperature by looking at the interest rate. And when you have low interest rate, you have a lot of demand. But when interest rates are going up, sometimes people feel a little hesitant to pull the trigger. So that's why we have you here today. So tell us what's happening right now in the lending industry. What's your forecast for this year? What your crystal ball is telling you this year?
Yeah, right. My crystal ball, that's funny. Well, so I studied the business on a daily basis, as you know, for the past almost 20 years.
Okay.
And so to make the story short, about 8 weeks ago specifically, and as I spoke to some of my peers, we noticed the market is creeping up rate-wise. And what we were counseling our customers to do was, Mr. Customer, if you truly, truly highly motivated to purchasing this new year 2018, what we want to do for you is want to get you fully pre-approved, totally and completely, so you are ready to pull the trigger. Some of them listened, some of them did not. That's just the nature of the beast. And so there are many components that drive the market, as you know, Robert. The Federal Reserve is one of the main parties that makes those tough decisions to increase rates. They've done that already. They did that last month in December. And the projection for this year is 3 to 4 more increases on interest rates. So that will be a market changer as well, a market mover. You look at the GDP report, came in very, very positive recently. You look at the stock market has been performing beautifully. You look at the unemployment rate being low. The bond market, basically, there's been some sell-off that's happening this week. 2.7% to be exact on the treasury yield, which is very significant because that means interest rates go up. And we want consumers that either serious about buying really to be ready and well-informed and well-educated. That's what you do as a realtor. You educate them in relation to the housing market. My role is to educate them with regard to the mortgages.
Okay, excellent. So as you can see, there was a correction in the stock market yesterday. I don't know, this morning, when I woke up this morning, I looked at the stock market and we were at 300 points on the negative. I don't know where it is right now. So definitely that's just telling you that there are some small corrections happening. I personally think this year, at least for the Washington metropolitan area, that we'll see an increase in prices given the shortage of inventory. But in some other areas around the country, I think we're going to see a market is going to be very flat throughout 2018. Maybe a correction will be due in 2019, as you said, interest rate going up and up and up, maybe 2-3 more times this year. That would definitely will slow down demand or make some people think about. Another factor that I think is very important to consider is as prices are going up, there is a segment of buyers out there that will be priced out from whatever they thought they could afford to purchase a property. And I think what that's going to happen and take is that some of these buyers maybe are going to become renters for a year or two. So that also can slow down the market dramatically. I am, all day long working with different buyers, first-time home buyers, second homes, and so on, that they just feel that prices are going way too high. And look, you and I have no control over what the prices do. That's just based on supply and demand. There's more people that want housing than what housing is available. So there's nothing we can do. So, okay, what else do you think we may foresee this year?
Well, as you said, you alluded to the stock market the last couple of days. It's been down a little bit, so that's true. It's a little bit of a correction going on. And I just go back to really, what are the goals realistically for a consumer? And what I mean by that is, have you 100% fully decided that this is really your time to purchase a home in 2018? And so if the answer is yes, I would just advise that consumer to talk to people like us who are very seasoned professionals. In my case, I will get them fully pre-approved, totally and completely. In your case, you'd be the trusted advisor as it relates to real estate, okay? So that would be a very, very high recommendation I want to give to them, anyone that is watching this video. In addition to that, I gotta tell you about this really exciting product that we have going on is for medical doctors. And a couple of key, very relevant points about the product. So let's say, Robert, that you have a first-time home buyer who happens to be a medical doctor, okay? And let's say that he wanted to buy a house up to $750,000, as an example. For that type of profile, we are able to offer them financing up to 100%. Okay, 100% financing up to 750 with a 700 credit score, which is really very, very reasonable. And the beauty is that that particular mortgage loan does not require mortgage insurance. So it's just fantastic. So that's one bullet point. Second key bullet point is this. Robert, they will have student loans. Medical doctors will have student loans, lots of them. The great news about this is also that if the loans are going to be deferred, at the very least 12 months after we close and fund the mortgage, we are not required to count that debt against the income. Does that make sense?
It does make sense.
And so we're excited about it. So we're offering that in Maryland and in Virginia. And it's really becoming a really big hit in my marketplace because, as you know, we have a lot of local hospitals in the area. We have the NIH and so forth. So yeah, we're excited about that.
Okay. So let me just recap what we just told, because it's a lot of good info. So number one is, if you are a doctor, medical doctor in the area, and you have looking to purchase a house up to $750,000 with a credit score, a minimum of 700 plus, you get 100% financing with no private mortgage insurance, correct?
That's 100% correct.
Okay, awesome. Now, when you are buying a house on the other scenario and you have student loans, and let's say you have a $500 a month on the student loans, so what I'm hearing is that debt is not taken into consideration as your debt to income ratio?
Since it happens to be what we call a portfolio type of program, that means that we can legally deviate a little bit from Fannie and Freddie rules, meaning that if the loan's going to be deferred for at least 12 months after we close and fund the transaction, we are not required to count that debt against them. So that is just a huge, huge help for the consumer, because as you know, medical doctors, student loans are quite large. So
they are.
Okay. So it's pretty cool. Yeah, pretty cool. What can you tell me about the real estate marketplace? Any new updates? Any new trends that we're seeing?
So, as I was mentioning a few minutes ago, what I'm seeing in the real estate market right now, it's number one, not a lot of inventory. There is definitely a huge shortage of inventory in the marketplace right now. And particularly if you're looking at homes that are with, one of the top schools districts in these areas, that we have one of those best school systems in the country. Montgomery County does. So if you're looking homes based on the school district, you're really going to have to fight. So what I'm telling some people is invest some time up front in getting pre-approved, like somebody like you, they can come and you get them pre-approved. So you come with a letter that is a lot stronger. I typically speak it called the Mickey Mouse letter. Is that type of letter that it is put together in 2 hours by some companies. They think that with that is enough. Well, what I like the other approach is if you go a little bit deeper into the finances, the credit scores, their savings, assets, and some other things that are taken into consideration to buy a house. I think, and of course, an underwriting is able to put the hands on it and say, hey, let me review this package. I think that has more power to the consumers. I think there is more chances of winning. Another thing I'm telling people is, look, I always tell you to do a home inspection. By all means, that's the best money you can spend. However, if you're going to be in a multiple offer scenario, either you do one for informational purpose only. And again, I'm not pressuring you to do that. I'm giving you the options. Or if the seller is allowing it, I will say, why don't we do a pre-inspection even before we submit an offer? Let's get an inspector. You're probably going to have to come out with $600 to $800 out of pocket, but at least that's going to be the best money you're going to spend to find out if the house is, number one, not only the one that you actually want for your family, but is the one that is not going to give you a lot of headaches down the road. Listen, all houses have maintenance, okay? That's a given. But at least you want to minimize the impact of any of the maintenance points down the road, so you're not feeling like every month you have to come up with thousands of dollars out of pocket or every year, and it's no fun. So those are the things that are kind of taken into consideration right now. Of course, large earnest money deposits. So the more money you put, the more you're showing the willingness to the seller that you are serious about this transaction, and so on. So there's a lot of things that I kind of like take this. I take a very deep one-on-one consultation at the beginning with my clients to understand exactly where they want to go, what they have heard, what they already know, and what could be a misperception of the industry, or in fact, their accurate details that they know that will help me expedite the process for them to keep moving forward. But again, by no means get one of those Mickey Mouse letters that you can actually just get like in 2 hours and present it, because that's no good to anybody. And you can put at risk your earnest money deposit. And if you don't perform, because perhaps you're dealing with a loan officer that is not experienced on the other end, that money the seller will be very happy to go after your deposit. So just to stay away out of problems and troubles and work with true professionals that will guide you. Remember, a professional to me, and I think you would agree with me, is that person that already knows the market, has a deep knowledge of the market and the trends, the ups and the downs. It's somebody that will assist you and give you the data that you need to make a very smart decision about your property. I mean, that can be comparables, that can be different interest rates, different programs. If somebody's only going to be in a house for 5 years, why go for a 30-year program when you can go for a 15-year program, and so on. And then it has the systems in place. It's not somebody that you need to call, you need to have that person available, you need to talk to that person. So that person needs to have the systems in place to ensure that they'll be available to talk to you. So those are the things that I'm always looking out there. But I'm sure you all have been hearing about, and I'm going to probably gear into a little bit more on after our quick market update from the lending side and the real estate side. I think I'm going to touch on another subject, the new tax law that was passed by Congress at the end of December of last year, 2017. I think there is a lot of buzz and a lot of noise out there in the market because of this new tax law that in fact, we are not going to have to worry about it, because it was not retroactive. It starts from the beginning of the year moving forward. So your taxes of 2017, and in full disclosure, I'm not a CPA, but already consulted one of my CPAs. It's that you don't have to worry about 2017, but when it comes to 2019 and you do your 2018 taxes, then some of these things are going to have an impact on what you're doing. Now, from the lending standpoint, what have you seen different? And again, this is all new. That, I mean, a lot of the people in the IRS and CPAs are still trying to figure it out. But from what we so far have as a data being released to us, what it's your feedback on the new law and what should be key points that people should be looking forward?
So I'll touch briefly on a couple of very relevant points as well. I'm going to address what we call primary residence, meaning the person who's going to occupy the property, their main home. Okay, and as you alluded to, this bill is very, very recent. It was signed into law on December 22nd, to be exact. Okay. I always encourage my customers to always consult their CPA because they're the ones that are really in the know. But in fact, a lot of the CPAs are still studying the bill. Okay, so they're still learning the bill. So you and I are like, okay, you know, we're doing the best we can, but we don't ever want a consumer to just think that we're the CPA telling them this and that. We're not. We just happen to be in our business. But I'll talk about a couple of points. Primary residences, for example, what's called the interest deduction, which is important because a lot of the money that they'll pay on a monthly basis, especially in the first 5 to 7 years, will be interest, okay? More interest, less principal. So the interest deduction up to December 15th of last year, 2017, they will still allow up to 1 million as a maximum deduction on the interest. So that's really, really important, very important. And then after that, what happens is it's capped at $750,000 maximum. So they're shaving a $250,000, right? Okay. So they go from a max of 1 million to 750 after December 15, 2017. So those are things that they should really be doing some study on to be well informed. And I do encourage them to talk to their CPAs. As you said, you know, everything's still being digested per se by all of us.
That's the right word.
So, yeah. You know, we're always on our toes, always something exciting happening. We just have to adapt to the environment, as you know, bro. So.
Right, and that's exactly what I tell people. You just have to adapt to the new environment because, look, we don't make the laws. We only work by the laws and by the laws, but we really don't make the law. So I think it's as much as you can inform yourself about the current changes, the best that you probably will be able to know what they need to take when it comes to this. So that's very important to know that they have now from $1 million to $750,000. And remember, what he's talking about is you pay interest rate on that amount of money every month. You may send a mortgage payment. There is interest that you're being paid off. So what he's saying is a portion of that, depending on your tax bracket, could be qualified for a deduction. And that it depends on, again, how your CPA see your finances and your income. Correct.
So it's always well to be educated. I mean, you and I, even though we've been in the business for such a long time, we're still learning. It's just, you know, that's the type of attitude that we want to have. We're always learners. We're always being coached by certain parties. And by the same token, we're coaching our customers as well. You coach them in the real estate realm, and I coach them in the lending business. So, you know, it's awesome. If they're teachable and coachable, I tell you, more time than others, they'll achieve that financial goal they want to get to. So we're excited about it, man.
Yeah, I'm really excited about this year. 2018, I think is bringing a lot of opportunities. What I like of this is that you can, in fact, work with real professionals. So be aware that there is, look, like in any industry, there's a lot of people out there that claim themselves or give themselves titles of whatever they do. You just got to be careful out there of, you know, who they're working with, how long you've been doing this. Remember, you know, in many cases, a long period of time of doing this kind of business equals experience, and experience equals less headaches and less problems for you. So I think that's something that you need to take into consideration. Make sure these people are affiliated with reputable companies that are not on the daily news because they're doing some bad things into the industry, or you know, the way they practice their business is questionable. So those are the type of things that we always wanted to make sure. Edwin, we're coming to almost to the end of this, and boy, time flies. It's always things go very quick, and I always enjoy talking to you, and through this format. And, of course, we always stay in touch on a day-to-day. Tell us more, where can we get a hold of you? Should one of our people watching the video should have any questions, what's the best way to get a hold of you?
Thank you. And of course, it's always a pleasure. I feel the same way. It's always really exciting when we chat. The best way to get hold of me is really call or text. It's 30980-3494. That's my cell phone. They can reach me there Monday through Friday from 9 a.m. to 8 p.m. and Saturdays from 10 to 7 p.m. So I'm just excited about helping the community and educating them and coaching them. If they want to be coachable, we'll help them and we'll give them the best possible package. I appreciate the invite. Always excited and always great, man.
Okay, thanks. Thank you. Thank you very much. I really appreciate it. Tell us, where is your office located? Should somebody want to come to your office, where are you located?
We're located in the city of Rockville.
Okay.
15800 Crash Branch Way, Suite 220 in Rockville, Maryland, 20855. Thanks for asking.
Okay, excellent. So you know where the guy is. You can get a hold of him through the cell phone, text him, or you can call his office to make an appointment and come and visit him to have a free consultation. Remember, everybody's watching this video. Edwin and I will be willing to sit down and go through a personal, detailed consultation about your unique case so that we can craft a good strategy should you be looking to buy a property this year. Remember also, Edwin can help you with a refinance. So if you're looking to refinance your property or at least have a second opinion, if you're already talking to somebody, he'd be willing to look into that so he can guide you in the right and professional way so that you can make the best decision for you and your family if it is the case. Again, we come to the end. I'm very excited about the opportunity, Edwin. I hope that I can have you on another call soon. So we'll try to plan this soon to talk more about how the spring market is going to start and how strong is it going to be and what are the things that you can do. So I promise I'll reach out and have you back here. And remember, Edwin and I are not about sales pressure, just education. Thank you, everybody. Stay tuned, and thank you, Edwin, for everything, okay?
Thanks, bud. Have a great day.
Thank you. Bye-bye.